It looks like every analyst on the street has said to buy the dip today, except for maybe one firm, Barclays, I think. Why do you think investors should not be concerned about this latest reinvestment cycle and what Amazon will actually get, when you take a look at metrics like Prime subscribers and things like that from this investment?
That's the key. Look, there's a leap of faith here because at the end of the day, Amazon saw their retail share gains decelerate, but they needed to reaccelerate that. And there's no better way than going to next day shipping. So they are more than willing to invest billions to reaccelerate that growth. And we saw that again in this third quarter. And the real prize here is getting spend per household up from around $2,500 today to, we think, around $4,000 in the next 3 or 4 years.
Because the average household spends $2,500 a year?
Prime household. So
the average prime household, $2,500. Do they lose money on same-day shipments of items?
We think it depends on how you define the cost around it. The key that they want is if they get more people spending more frequently, then they get all the data. And hidden in the numbers, I think this is an important thing to flag for people, advertising grew more than 45%. That's a business we think could be over $10 billion next year at a very high margin. So you talk about spending billions of dollars and losing it, if you will, on next day shipping. If that gets you the ability to explode your advertising business 45%, it'll start to pay off in a couple of years.
So the return on investment might be households spend even more than they already spend because of next day shipping or same day shipping. And they also get this data from which they can sell advertising, although this data is now in the crosshairs of regulators, I presume.
Absolutely.
So that's a discounted asset.
That's an entirely right. That's the next discussion about it. Besides, again, a libertarian rant from me. I personally don't have an Alexa working in my house because I just don't like it. But our survey work tells us that now almost 40% of American households have a personal assistant speaker device like an Alexa, and that 14% have used it to buy something. If that looks anything like mobile commerce did 7 or 8 years ago, today, 85% of people say they shop with their phone every day. So Alexa's going into cars, it's going into everything, and that's the real prize.
And 40% already is a huge win for them, obviously, in this nascent place. What about the cloud business? I mean, does anything there give you concern about the trends there? Is it losing out competitively? Is this going to remain a headwind?
I'm glad you brought it up. So my partner, Lee Horowitz, on the stock is all over AWS. I'm the retail guy, so to speak. But if you look at one of the concerns of AWS was that the margin stepped back. So that had been the side of the business that had continued to power forward. They've entered a reinvestment cycle there as well, about a quarter later than in retail. So that's something that people will be watching. I think, frankly, today, if the stock doesn't up down, it probably has more to do with that AWS investment cycle starting rather than the retail one, which, frankly, started earlier this year and we already kind of knew about.